Hey guys, what's going on? In this video, I'm going to break down why everyone is wrong about oil prices, the direction of oil prices, about the current condition of the chart of the oil prices, and what does it have to do with the direction of the market overall? How is it correlated to some of the stocks or instruments that you currently trade utilizing options? So this is a video for someone that really tries to understand how market functions, but also watch too much news instead of focusing on the charts. You're not gonna make any substantial amount of money trading the markets. You gotta develop your own opinion, forming the markets, and hopefully, if you study all the 13 Market Moves curriculum, you're gonna improve as a trader, and you're gonna be able to catch some of these totally mispriced situations in the market. So without any further ado, let's roll. Here's what Goldman Sachs got to do about oil prices.
Senior economist at Goldman Sachs.
And the confidence into this bullish forecast that China will boost global oil demand by 1.2 million barrels per day is driven both by fundamental analysis and some pretty encouraging high-frequency data that we're seeing at the moment.
Okay, so $100 a barrel for Brent.
So $100 a barrel, according to this guy from Goldman Sachs, senior economist. Damn, sometimes I wonder, how do these guys even get a fucking job like this? This is, like, did this guy even look at a fucking chart of oil recently? That's the kind of stuff I wonder when I hear somebody like that in the news. So basically, guys, he's saying that oil is going to go to $100. The reason he's citing why oil is going to go to $100 is because he thinks China is going to increase demand. Now, that story is old as fuck, okay? If China was going to increase the demand, we've already seen it by now. China's slowing down. The economy is slowed down. China's got a lot of problems that are going on right now. Therefore, if you watched some of my recent videos about shorting Chinese stocks, by the way, guys, congratulations. Killer trade on fucking Baidu today. Whoa, what a fucking drop right from the top. Okay. Little deviation back to the oil prices. So we've got a highly bearish chart on oil. Got Goldman Sachs basically saying, hey, because Chinese demand is going to increase, because Russia has cut by 500,000 barrels a day, those are your catalysts to move it back to 100. That shit ain't going to happen. For oil to move to 100, we need like a real war with China or some crazy. We need the war in Ukraine to escalate to insane levels. Okay, we need some kind of further interruptions on a major level in the world for the oil to shoot back above 100. If you just utilize the reasoning for Chinese demand and Russian cut, those are old news. Old news do not drive prices of something higher. So let's move to the next contestant here for higher oil prices.
Head of commodity strategy.
As the fundamental picture, it is more bullish today than it was at any point since this COVID rebound. Now, China is going to come back over the course of the next 3 to 6 months, and as they come back, they're going to eat up any of that spare capacity that was created by their drop in demand. That's going to tighten all of these markets.
There's going to be a bull cycle in commodities.
By the way, our conviction in the bull case has never been stronger.
So basically, this is what this guy says. His conviction has never been stronger. That's when oil trades at, I think, 79, 80 that day, right at 80. And this guy, apparently just another guy who needs charge divergences from 13 Market Moves course, because basically if you have taken the course, you would have known this is a head and shoulder formation. Here's your shoulder one, here's your head formation, volume's drawn at the top. Okay, here's the second shoulder, guys. Next move is lower. So far from the time he's been so freaking bullish, oil is down about 5-6%. In any case, guys, this is a much bigger pattern that is often overlooked. Besides head and shoulders, guys, what you really have here is a strong tornado pattern. A tornado 1, tornado 2, tornado 3, tornado 4, undercut in the prior high. Guys, the next move is lower in oil. But I'm not here to just make a bearish video about oil. I think there's going to be a colossal opportunity to buy this next drop in oil. And so for that reason, I think there's a colossal round trip trade that you guys could be taking advantage of here. So the video is not just being bear. Clearly, you'd have to get that part of the round trip trade correctly first before you could actually act on the move higher, such as in the move 13 that we're seeing is coming up for oil in not so distant future. But first move is lower, which we can clearly see from this chart. And here's the next bull on oil.
The year rising another 2% plus today. The commodity, which hit its lowest level since last December on Friday, is now up more than 8% this week. So is the worst over for crude? Let's bring in Paul Sankey of Sankey Research for more on what 2023 brings. Paul, good to see you. So we've seen the lows for crude, you think?
For this year, I think so.
Yeah.
But, I think if you look back at 2018 and the taper tantrum, we had very similar market action that we expect every year anyway from Labor Day into the beginning of winter, which is essentially what we've seen, a significant fall off in prices since Labor Day, essentially down to the lows that we just saw. And if you look at what happened in 18 into 19, we saw crude running hard into driving season. So we're looking for $120 Brent.
Okay, so basically this guy calls for almost 100% increase in the price. 120? I mean, he should have just fucking went ahead and said 200, And again, all of these reasons that these analysts are given simply boils down to the main thing, which all of them agree on. That's why they all got it wrong, and that is the demand. I mean, based on plethora of other charts, as far as the market concerned, I mean, we're going into severe drop-off here over the course of the next 6 months. Partial drop-off that we're witnessing right now based off historic analog. And so clearly, they're all excited, and so that interview was taken right around here when oil was bouncing, right? So we've set that last low, it's bouncing, everybody's happy, and everybody turns bullish, right? Every time oil pumps, oil bounces, everybody turns bullish. So instead of utilizing the simple strategy we use here at 13 Market Moves, just short the fucking bounce. Sometimes it just pays to keep things simple. It bounces, what do? You short it. It drops, you collect profits. It bounces, you short it. It drops, and you got to be able to distinguish the moments at which that drop actually has a high probability of a continuation, which is exactly the setup that I'm showing you here right now. So basically, over the course of the next 72 hours, we could see a sharp drop off to 72. 72 is not likely to hold because the general consensus, every one of those analysts, I can't even find some of these videos, but the general idea is Biden is going to go and buy this oil at $72. And they all run on that because Biden has absolutely zero interest in dropping oil at $72. His goal is to destroy Russia. The way you destroy Russia is you let oil prices drop to the point where Russia can't collect enough money. So also, Biden administration, I mean, who came out with this bullshit anti-inflation act? Okay, well, it would be totally in his favor to let oil drop here. For that reason, I don't expect oil to stop the drop here at 72. I don't expect oil to drop here at 70. We're going to have a major move down to 69, 65, possibly over the course of the next couple of weeks here. And that's definitely the drop below 72 will get the market's attention to the point where that could be the catalyst for the next major leg lower over the next 48 hours in the general markets. That could give them a huge catalyst to drop, because then the discussion switches, hey, who cares what the Fed is doing? Why do we have fucking oil prices collapsing? And at that point, people realize, hold on, nobody's buying here at 72, 70. Okay, that's when you get a major move lower. That's why it's called a tornado pattern, because it could produce some colossal short-term moves to the downside.
More than 8% this week, their best week since October, and the chart master sees even more upside on the horizon. Let's bring in Carter Worth of Worth Charting. Carter, what are you looking at?
Well, it was a firm day. I mean, we know nat gas was up 3.5%, oil up 2%, while industrial metals down 2%. Let's look at some charts. I only have two. One's a short term, one's a long term. So dispense with the line that I've drawn. We would all agree, right, this is a downtrend. It's moving from the top left to the bottom right. But the rate of descent is abating. We have a series of lower, high, lower, but no new low, no new low, no new low. And so you're starting to get a formation, I think, that's setting up like that. But let's look at this exact same chart and pull it back. second of two charts. So that's that line we were just studying. And what we have here, again, is so often the case, the lines inform almost everything. Where does it bounce? To the penny. Where does it bounce? To the penny. Where did it stop here? To the penny. And so now this is an inflection point. Does it have to go up? No, I'm sure there are people betting otherwise. My thinking is it does go up. We put in the green arrow. I think 85 is where we're headed. We closed at 79.72.
Hey guys, now I actually like this guy a lot. Carter Worth, he gets a lot of stuff right, but unfortunately he is wrong on this particular trade on oil. So it often pays to take a look at multiple time frame charts. So here I pulled up oil on a weekly chart, and you can clearly see, guys, this is a major bear formation on oil, because this is a representation of a shoulder, this is a representation of a topping formation, this is the representation of the other shoulder, which ultimately results into a move lower. Now, if we glance at the chart of oil again on daily chart, just to refresh your memory on that. So we have a perfect match on a weekly chart that is a head and shoulder. We have a smaller time frame head and shoulder, which also is viewed by us here at 13 Market Moves as a tornado pattern, which have sharp results to the downside. All of that is preceded by a double top formation right here. It is crossing MACD to the bear side right here. There is an RSI divergence right here. There is multiple, like the reasons for, the number of reasons for oil as far as chart concerned to move lower here is overwhelming, and there's very few reasons for the oil to move higher. Now, if you listen carefully to what he was saying, basically he was saying, look, we've made a low here, but then the second time we've dropped, we didn't go below this level, and the third time we dropped, we didn't actually go under this level. So his assumption is it's a series of higher lows, which ultimately basically leads to a move higher, but he's clearly unfamiliar with the tornado pattern, which is this right here. This is a very pronounced tornado pattern, and oftentimes not only will it undercut these two lows, it will also undercut this low, and so the could possibly be a fight around 70, but I don't think it's going to be a fight. We're clearly going to 69 bucks in my view here. So let's see how fast that's going to happen, because that's going to have a direct impact on how fast the next move lower in the market is going to take place. So if we get a move lower in oil to where we're going from 76 to 75, one day back up 50 cents down. So if it happens slowly, it doesn't really make a huge difference. But if we get a sharp move, like a 4% day, followed by another 4% day, followed by another 5% day in oil, the market is going to react. So that's the key takeaway. You got to look at a lot more than just, are we forming a series of higher lows here, right? Because that is just one aspect of looking at the chart. So you got to be able to look at a lot more things on the chart before you form your overall opinion of where things are headed. So as much as I love Carter, I may be sending him a 13 Market Moves course to help him out.
Today, Russia's going to cut production starting in March, and that's certainly going to impact the global oil picture here.
It's always to the penny. And I think you have a case here where I believe that the energy supply dynamic is not something that changes anytime soon.
Energy dynamics, my ass. This guy never placed a trade in his life, I promise you.
Just getting through. In fact, the energy earnings this week that came out of a Pioneer or some of these other companies, they were very strong. We continue to hear about higher payout levels. We hear about debt paydowns. And back to what Jeff said, you want to find companies that are increasing their cash flow and companies that are going to do well in this environment. The energy companies are a place you're going to get that.
Okay, so the name he just brought up is Pioneer Natural Resources, which is ticker PXD. At the time this interview was taken, Pioneer was at about 230. Now, you've heard me bearish in the last few videos on Pioneer, saying it could hit a level of 200. So basically, this guy is saying stay bullish on stocks like PSZ at the moment of the fucking top. So since then, the stock down 10%, and probably, I don't know, in the next couple of days, I mean, it could be down as much as 15% since this guy was recommending this beautiful thing right here. Apparently, he's never looked at any fucking chart.
Oh, and the capital discipline. I mean, think about an ExxonMobil, for example, right? Record profits, but they're still talking about cutting costs and managing that side of the business. I think that's important for these companies. Sure, you can argue that they've over-earned over the past year, but at these multiples, I still think the stocks can do pretty well. If you look at the charts, they're still relatively supportive. And
yeah, here's another guy never took a fucking trade in his life. Yeah, he's right about one thing, and that is the charts are definitely supportive. Just not of what he's proposing, which is the bull case. The charts are definitely supportive of confirming that this is a motherfucking top right here. As you saw on the screen, he was recommending you to buy ExxonMobil at 119 and change. The stock since then is 108, 110 level, and it's got more downside to go. Some of the other stocks that were on his screen were stocks like Chevron, and we've actually recommended a huge short on Chevron despite of all this bullishness in the news. Chevron stock actually is down by a greater percentage than the stock of ExxonMobil. So 180s all the way down to 161, guys.
Yeah, and I definitely like energy. This is one of my letters, my acronym here, so I'm definitely bullish on this. But Tim, you bring up some good points. The supply and demand constraints have not gone away. If anything, they've gotten worse since China reopened. And I also think when you look at the long-term earnings growth in energy, it's actually still, believe it or not, expected to be better than even your technology sector. So yes, it may not outperform to the magnitude that it did in 2022, and that's why I think a lot of people have just put it by the sidelines. But it's still going to do very well this year, and I really like his charts here. I would still make sure you have this in your portfolio.
I mean,
yeah, and I would make sure somebody sends her an extra brain. Jesus Lord, how did they let her on the show? Oh, everybody's bullish on oil. Oh yeah, pick me. I'm bullish on oil too. Holy shit. Come on. You gotta be kidding me on this. Listen, okay, do you hear what she said? She said, energy is gonna be better than technology. Holy fuck. Okay, so I don't know if she's been around last year, but like since she's referencing how well the energy stocks have done last year, I'm assuming she was. So technology stocks drop by 50 to 70% in certain instances. If she thinks energy is going to be better than technology, maybe she means really like shorting energy would be the best fucking idea. Because based on this charts, guys, okay, she absolutely has got no clue what the fuck she's talking about. Okay, guys, so what's the key takeaways here? Well, number one, learn to read the fucking charts so you can make serious money in the market, okay? Learn the 13 market moves formula so you can see these key pivotal moments, while clearly most of the analysts, they're absolutely clueless. But if you stuck this long into the video, I'm going to give you the most important correlation, okay, to watch in the market right now, and that is the price of oil, right? Let's bring up the chart one more time. The price of oil is likely not to hold the 72 level as discussed in the video. It's likely not even to hold the 70 level as discussed in the video. Okay, so there it is. Remember this picture. So tornado pattern, we're going severely lower here. The question is, how is that going to impact S&P 500? Because most of the guys, hey, let's face it, you trade, despite of how many videos I recorded to make sure that you set up your account properly to trade futures, options on futures, okay, you still trade SPY. Okay, so if you're refusing to listen, okay, you probably just wonder, okay, what is this oil thing, Leo's, got to do with the price of SPY and what SPY is going to do in the next few days? Well, it's simple. When you get a sharp drop, not a dollar drops by $1, moves higher back by 50 cents, drops another dollar, moves higher back by 50 cents. Not that sort of move. If we get a sharp drop where we get 2-3 points lower in oil, today we get 2-3 points lower in oil, tomorrow 2-3 points, meaning it goes to 74, it goes to 72, it goes to 70 in the next 72 hours, you will see the market breaking. The market will break badly, okay? So S&P, if you want to know more information as far as, you know, the overall market direction, we've matched it with an exact point right here on a historic analog, where if you care to review that video, there's 2 videos about the market crash that we predicted was going to begin on Friday. So since Friday, guys, if you've been paying close attention, the market is down 3 days in a row. We're fighting this 4,000 level. This level is not going to hold, guys. We're gonna go way below that. It's just a matter of time whether it's going to happen in the next few hours, whether it's going to happen in the next 24 hours. But this level will be broken, and we're going to see the market way lower. In the last video, I've pointed out that the market will go lower by 5 to 10%. Well, we're already down about 130 points from where I have called the top in the market in the beginning of this crash. So far, things have not collapsed in a huge way, but as pointed out in a couple of videos, that some crashes, they begin slowly and then they accelerate. So clearly you see the small indifference candle on a Friday and you're thinking, okay, well, there's not a big deal. What's the big deal, right? There's no crash. And then you have an acceleration. What we call in 13 market moves here is an expansion of the move. You have a small move, you have an expansion of the move, and right now we're on pace to have even a greater expansion of the next day move. So today we can have still a huge move in the markets. We could have a phenomenal move overnight in the markets. Which is why it's so important to set up your trading account correctly, because some of the biggest moves will take place outside of normal trading hours. So if you're wondering how to put a 10x trade together but your account is not set up correctly, make sure you give us a call here at 13 Market Moves. But if oil drop accelerate, if it's not going to be business as casual in the next few days, which we don't believe that's going to be the case. So given that oil price drop accelerates, this would be the next catalyst that has nothing to do with the FOMC minutes review today. It has not, the next big catalyst for the market to drop in a bigger way, maybe down here to 3,800, 3,850, would be the acceleration in the drop of oil prices. So hopefully you learned something new today, guys. I'd love to see you succeed in a big way this year. As you know, we are on a mission here at 13 Market Moves to help 44 traders take their account practically from nothing, 5K, 50K, all the way to million plus. So if you think you got what it takes, guys, make sure you reach us today. Don't waste another day in the market trading without the 13 Market Moves coach. I see you guys in the next video soon. Let's roll.
First, distract target. Then block his blind jab. Counter with cross to left cheek. Discombobulate. Dazed, will attempt wild haymaker. Employ elbow block. And body shot. Block feral left. Weaken right jaw. Now fracture. Break cracked ribs. Traumatize solar plexus. Dislocate jaw entirely.